Morning, everyone. This is SDRActivist, and today is March 10th, 2020, and the time is 9:44 a.m. Central Daylight Time. And what we're looking at here is the daily chart that expands over 2 years for the U.S. dollar index. Now, the U.S. dollar index is calculated using six separate international exchange rates when attached and formulated by the US dollar. Those include the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. So I'm going to cover this chart. Let's go and break it down to a year on the daily for now. And then we are going to show you how to calculate the US dollar, which surprisingly, every financial advisor I've come into contact with, at least your average everyday advisor, has no idea how our dollar is formulated in the first place. So, okay, so here's what we have. So obviously there was a massive drop as far as significance goes in dollars. So let's take a look at this. The top, we had a high of 99.910 and a low of 95.788. Now, that's between the dates of February 20th and March 10th alone. As you can see in previous videos, I've mentioned these two purple lines, well, I should say this purple and this bluish line represent the Bollinger Bands, which, think of the Bollinger Bands as the boundaries between where the stock asset or foreign exchange rate will proceed in the future, or has proceeded to stay within the limits of. Now, it's a great boundary. As you can see, it's almost always within it, and this is based off of statistics. So it is based in mathematics and reality. But let's move forward. So what I noticed immediately is that this 20-day moving average, which you may notice on the side note is in between these Bollinger Bands, or the boundaries I was referring to, is dropping down at an exceedingly high rate as far as anticipation goes. So what we may be seeing, and we've already kind of begun to see, is a bearish crossover between the red line and the purple line, which are the 100-day and 200-day moving average. And we may see an additional crossover in the 20. However, generally speaking, when you watch my videos, you'll notice that, yes, I do analyze the charts and I do give the facts, but I do not draw conclusions in my projections until I have the fundamental information, the psychological information of the market, how the market is affected by a mania, for example, if a disaster of significance takes place, a public health crisis, a scare in stock indices. So we notice that we may be looking at a bearish crossover, and this is preceded by that significant fall that we had seen in the daily chart. Now, again, in this period, we're looking at a low of 94.85, a close of 94.895, and previously on the 20th, we're looking at a high of 99.910 and a close of 99.855, and lastly, a low of 99.528. With momentum, the stochastic indicators, specifically the slow stochastic. Another great indicator is the fast stochastic, which we can cover in another video if you are interested, just ask. So we've been moving horizontally down here for below the 20 level for a significant period in the near term. So that's highly bearish. These orange and black lines are referred to as the K and D lines, which we can cover in that the aforementioned video concept I just stated. So now, that's highly bearish. You have this drop. You have a potential bearish crossover. Another factor is going to be support levels. Now, on the 2-year chart, you can see this more clearly. That it's a daily chart. Now, let's make sure we're specifying. Always want to be clear. What we had, let me take just a quick look. So we had support, from what I've seen, a great amount of support on the 96 level to high 95s. And we just closed at 94.895. And if you go even farther back, or further back, I should say, you'll notice that For example, this low, 93, 95, this level is highly supportive, but 96 was significant. So the next level is going to be 94 to approximately 93. And below that is when we're going to run into some more issues as far as bearishness. The low on this chart, for example, is 88.253. You see how this fell below. So let's draw a quick line and run a quick visual representation as promised and do a review for you. So, first thing that we discussed was the fact that we're looking at a potential bearish crossover with the 20-day moving average and the 100 and 200, which are the red and purple lines respectively, as well. Now, let me just set this up for you so that you do have this. Label this as a 1, so you can take a look at it at any point. And then we're going to identify this with just a quick note. Now, what this says is that we have a potential bearish crossover between the 20, 100, and 200-day simple moving average, as stated, so that you can see the visual illustration in the text. Next, the second thing that we had discussed was the stochastic indicator. Number 2, and as we had stated previously, we're looking at this as a bearish indicator as well. So let's identify this through text, just like the other one. Just make a quick note. Stochastic, K and D lines. Okay. And lastly, there's going to be your support levels. And we were looking at a low. Let's just draw a quick horizontal line for support. Let's find a great spot. So 95 level, 96. Okay. Just to be clear, we're going to do an approximation here. Now, approximations aren't typically the best, but everything is an approximation. And the markets, as you have psychological factors, you have technical, fundamental factors, and so on and so forth. Let's jump into how to calculate the US dollar index. The US dollar index is currently standing at 95.815. Let's move forward and proceed with the formula, which is so helpful when trying to understand your market. So, it consists of 6 currencies, the US dollar, when calculated. The euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc, as previously stated. And each of these retain a value or weight against the dollar. Now let's take a look at where each of these are at. You're going to go euro to USD, which is at 1.1372. Let's refresh this just to be a little more accurate. The USD JPY 103.89 or 103.93. The GBP USD, that's the British pound, that's 1.3004 or 1.2998. The USD Canadian dollar 1.3744 or 1.3740. The USD Swedish krona or SEK 9.79, that is 9.4713. or 9.4671. And lastly, the Swiss franc, which is at 0.9322 USD CHF. So let's jump right into the valuation and how to calculate the US dollar index. You're going to take first the greatest weight, even though it's negative, it's correlated most highly, the euro to the US dollar, which is at 1.1369. And you're going to bring that to the exponent 0.576, and you want to make sure to make that negative 0.576. Next, you're going to move to the next in descending order, the weight of the US dollar to Japanese yen, USD/JPY. And you're going to multiply this, the value of the euro here, against the Japanese yen. So you have 103.93, and the exponent for the Japanese yen is going to be 0.136. Comes out to 1.7470, and so on. Following this, it's going to be the British pound, which is going to be another negative exponentially. So you're going to multiply this by 1.2998, or the value of the pound, to the negative 0.119. Let's make that negative here. 1.6934, and so on. Next, you have the US dollar to Canadian dollar. So you're going to multiply this by the value of the Canadian, 1.374, to the positive 0.091, 1.7430838. And the Swedish krona is second to last here. You multiply this by the value of SEK, that's 9.4671, to the 0.042, which is positive, and you get 1.91566, and so on. And finally, we have the Swiss franc, the value of which is 0.9322, and to the power 0.036 positive. And finally, we have what is ready to multiply against the US dollar multiplier, which is 50.1434811. Let's take a look at that here. Should be listed in this document. Let's find it. 50.1434811. There you go. So you can take a look if you want to pause it. Point. So let's see how we did. So all of this is moving in real time. So the time it actually takes to calculate this is going to differ from the exact price at that time, but knowing where your dollar comes from is crucial. So what we got was the point 95.81559. Now, you see even the dollar's moving up and down just a bit. We were basically there by less than 3 cents. So that is a great calculation in that regard. So just to review very quickly, let's take a look at it visually. The US dollar is made up of 6 currencies. The index, that's the euro, Japanese yen, pound, Canadian dollar, Swedish krona, and Swiss franc. The euro to the 0.576, which is negative. Japanese yen, positive 0.136. British pound, 0.119. That's negative as well. Canadian dollar, 0.091, positive. Swedish krona, 0.042, positive. And Swiss franc to the 0.036, positive. And here's a look at this, which you're going to multiply by which we have here at the end, 50.1434811. So you take the value of the euro, multiply that by the yen, pound, Canadian dollar, Swedish krona, and Swiss franc, by these weights each individually, and finally multiply it by the US dollar index multiplier, and you have it. There it is, guys. Why don't you embarrass your financial advisor for us and ask him or her about how to calculate the U.S. dollar index. Maybe if they work at Goldman or so, they'll embarrass me as I embarrass myself every day for you. No, just kidding, guys. You have a wonderful day and the market. And feel free to comment, critique, give feedback, or make requests on what markets or subjects to cover.